Hello everyone, hi, welcome to the channel Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we have a topic to learn which is treasury stock, that's treasury shares. Well, let's get started on this particular topic. As you can see, there's an extract over here from the balance sheet, from the shareholders' equity, and well, we have a couple of details on the paid-in capital, retained earnings, accumulated, and other comprehensive income, and we also have something that's called treasury stock at cost. So, what exactly this is? Let's understand this. See, treasury stock is basically is the stock that has been what we call as reacquired. It has been reacquired by the issuing company from the shareholders, but they are not yet retired by the company. So treasury stock basically reduces, what does it do? It reduces the shareholders equity, it reduces the shareholders equity. Now the treasury shares date does not represent an investment in the firm. It does not represent, absolutely does not represent an investment in the firm, and also it does not receive a dividend, and have basically no voting rights also in this particular scenario. So the treasury shares are not taken into account for calculating dividend EPS. Now let's understand the treasury stock in the balance sheet. The treasury stock is companies what we call as the own stock that has been reacquired by the issuing firm. So the treasury shares is usually that has been reported at the end of the line item. It is reported at the end of the line items within the equity section. When the company repurchases, the stock, the expenditure due to repurchase is recorded on the what we call as the contra equity account. Okay, so the direct effect of writing a treasury stock transaction is basically, you can say, reduction. It is known as what? It is reduction in the number of shares. So in these two methods of accounting treasury stock are cost method and par value method, two methods. Now in the cost method of accounting treasury, the stocks are the what we call as in the cost method, the paid in capital is reduced in the balance sheet when treasury stock is purchased. And under the par value method, what exactly happens that during the repurchase, the book value, sorry, the books will record it as a retirement of shares, you can say that. Thereby, the common stock is been debited and the treasury stock is basically what we call as credit. But in both the methods, the transaction related to the treasury stock cannot basically increase the amount of the retained earnings. It cannot increase the amount of the retained earnings. So the treasury stock example of I'm going to show of Colgate shows how treasury shares impact the shareholders equity of the company. Now, this is the example of treasury stock which this is the example of the treasury stock at cost. How exactly does it impact? And what we try and notice, if we see something over here the shareholders equity is reduced by the treasury stock or the treasury shares. Over here is a negative number. As you can see, this company Palmolive, Colgate, they try and implement what we call as the cost method of to account for the treasury stock, and closely to 19.135 billion worth of treasury stock as on December 2016. Now let's take some examples to understand this in a detailed format. Let's assume that there's a company called ABC. It takes a decision, let's say, to reacquire. It takes a decision to reacquire some of its shares, since the share of the ABC are currently, let's say, undervalued in the open market. So when a company ABC buys their shares back, then they become what we call as the treasury stock, the TS. And it must keep in mind that if company ABC decides to resell accounting treasury stock, then the profit or the losses on the accounting treasury stock transactions are not at all recognized. It is not at all recognized in the income statement of the company. Now, suppose let's say the ABC has excess cash and it sees that its stock in market is trading below the intrinsic value. So basically over here it decides to buy back, let's say, 1000 shares of its stock at $60 for a total value that is $60,000. 1000 into 60 for a total value of 60,000. So the total sum of the company's equity account, including the common stock and the retained earning, is going to be 1,20,000. So this repurchase of this stock leads to treasury stock contra account, following which 60,000 accounting treasury stock repurchase is deducted from 1,20,000, right, from the equity account, and the balance thus leaving us 60,000 in the similar manner. So the cash account on the asset side of the balance sheet is also decreased to the extent of 60,000. Well, this was a particular thing regarding treasury stock. We tried and understand with the help of an example here, but we'll see some of the difference between the treasury stock and outstanding stock. What are some of the differences? Well, treasury stocks have no voting rights. They have no voting rights. But the outstanding has voting rights. They do possess voting rights. Treasury shares do not receive any dividend. No dividend. And over here, yes, dividends. Right? All the shareholder of the other outstanding shares, they receive the dividend. Third, the treasury shares, they are not included in the calculation outstanding shares. And over here, they are included. They are included in the calculation of outstanding shares. Fourth, the treasury shares over here, they cannot exercise any privilege rights, what we call as shareholders. And over here they can exercise such privilege rights as a shareholder. Well, so that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you everyone. Cheers.